Thank you so much for joining us. If you could just run us through your numbers and then I'll probably take it from there.
Great to be with you. We've just, of course, reported our Q3 numbers. On the whole, it's been a reasonably good quarter for us. We've had a couple of notable accomplishments, including that we've added a new project to our portfolio here in Mumbai, a project on LBS Marg in Bhandup, which we hope to launch in the next calendar year. The other good piece of news is that despite a very challenging macro environment and quite sluggish real estate sales, we've actually seen a quarter-on-quarter increase in our bookings of about 29%. So I think that's been quite good. On the whole, our financial results have been somewhat flattish. Our revenue came in at about 254 crore. Our EBITDA increased by about 20% to 100 crore, and our net profit was about 5% up at 37.5 crore.
Your top line, total income has degrown this quarter. I mean, if I were to do a year-on-year comparison, what would you attribute the drop to?
You know, it's a little bit lumpy always in terms of real estate revenue recognition. The way the accounting methodology we follow is revenue recognition based on percentage completion. So projects that enter into revenue recognition's threshold in a certain quarter lead to a little bit of lumpiness. So we didn't have any new projects entering into that threshold this quarter. So for example, we actually expect next quarter to see a bit of a jump in revenues because we do expect to have some new projects entering that threshold.
And that would be by what percent roughly?
You know, we wouldn't like to comment specifically on that, but certainly I think we can see a substantial up move in revenue both in the current quarter and certainly for the rest of the calendar year.
The other income has really seen a spike. I mean, 12 crore this year. If I were to do again a year-on-year comparison, other income what would you?
We have some amount of capital that we raised in our rights issue that has been deployed in temporary income-generating assets. So that's really the difference. That capital wasn't there in the comparable quarter last year.
So while we're talking about the 700 that you raised, has it been completely deployed, or is that a portion which is going to go ahead in the coming
No, it's not been totally deployed. Some has already been deployed. Some amount has been used to repay debt. Some has been used to invest into new projects. But a large amount of it is still being held to be deployed over the next few months.
Roughly how much would be of it remaining, which you will see in the next financial year?
We have about 400 to 500 crores that will still be deployed.
Talking about the RBI repo rate hike, how you see that impacting the home sales, because it's going to probably already the subdued churn of sales. So you think it's going to impact that in a way?
Well, I think it'll depend a little bit on how the banks react and whether, in fact, this is passed on to consumers through an interest rate hike by the banks. I think there's some debate about whether that will happen. Clearly, on the one hand, I think interest rates increasing is a negative for the sector, both on the cost of borrowing side and on the cost of acquisition for customer side. That said, I think what has helped greatly with the RBI moves over the last few months is that I think a great amount of attention and thought is going into the process, a great amount of credibility is being built. And I think what the governor has indicated is that while interest rates have been hiked by 25 basis points, that he doesn't believe that there's a great likelihood of further increases. And I think if hopefully we don't have any further increases and later in the year we can even start seeing some cuts, I think of course that can be a big boost to the sector.
But do you think the people sitting at the fence who are waiting and watching will defer their home purchases?
Well, I think people have already deferred their home purchases. So if you look at it, the data we're seeing suggests a pretty large volume drop in terms of real estate transactions across the country this year over last year. And it's not that last year was a very strong year, actually. It was quite a weak year itself. So I think the level of activity in the sector as a whole is quite is quite concerning. And I think things have we hope at least bottomed out from here. And I don't see much further room for a decline, but you of course can't rule anything out. But I think our expectation is certainly that 2014 will be a much better year than 2013. One, interest rates we hope during the latter part of the year will decline. I think what could be a big trigger, of course, for the economy as a whole, for sentiment in general, and certainly for the real estate sector, is the general election and the solidity of outcome that comes through those elections. So I think, of course, we're all waiting to watch what happens there. I think from the perspective of Godrej Properties specifically, though, we feel very good about 2014 because while we've had some setbacks in terms of launch timelines getting delayed and things from 2013, a lot of those launches will happen this year. We've been adding a lot of new projects to our portfolio, which we hope to launch over the next 12 to 18 months. So we expect our best ever year from a new launch perspective. And even in a subdued market, we believe will be good demand for these launches. And of course, if the environment improves, so much the better.
So what is your launch pipeline 2014-15 in terms of sales, or that'll be units that will be available?
Right. We don't, again give specific guidance on this, and the exact sizing of phases within projects, etc., is decided much closer to the launch. But what I can say is that we're very optimistic about the launch pipeline because we have very significant projects in all major markets across the country. So, for example, here in Mumbai, we hope to launch a township project in Panvel, which we're very excited about. We're launching our first redevelopment project in Chembur, which as a geography is doing very well with all the new infrastructure there. We have other launches in Chembur as well. One of our Vikhroli residential projects will be launched this year. So we have a very robust portfolio here in Mumbai. We also have exciting launches planned in NCR, in Gurgaon. We have launches planned in Bangalore, Pune, and elsewhere. So I think from across India perspective, we have a large number of projects that we hope to launch in 2014.
Any fundraising plans for this launch?
No, as we were discussing, we've quite recently completed a rights issue exercise. So our balance sheet currently, we believe, is very strong, and in fact has room for us to commit further investment. So there's no fundraising plans at all.
Are you comfortable with the debt equity ratio? Where does it stand today?
It's a shade under 0.7:1 currently, and we're very comfortable with that level where it is. It's come down very substantially over the last couple of years.
While we were talking about the presence of Godrej's increasing the FAR to now being probably 2.25. You think that will impact the Gurgaon market in a fashion for the good, and do you look at expanding your portfolio in that Gurgaon market?
Yes, we've been quite a recent and late entrant to the Gurgaon market in some ways. We had our first project there about 2.5-3 years ago. We've since added one project that was very successful last year. We actually sold 1 million square feet in one day in that project. We've since added a third project which we hope to launch this year. And certainly Gurgaon now is established as one of the biggest real estate markets in the country. So we do see a long-term presence for ourselves there. I think my general view is that FSI increases are good all around in almost every geography. They're obviously good for developers because you can get more space on the same amount of land. Ultimately, they are very good for consumers because the more space that can be created on any given amount of land inherently reduces the cost of that land, and therefore ultimately the cost per square foot to consumers. And I think attracting or promoting development in an integrated and concentrated fashion has globally been proved to be a very sustainable and ideal way to develop cities. So I'm all for FSI being increased. Of course, it has to be appropriate ways of planning and thought through from road widths and all of those perspectives. But certainly, I think this is a welcome move.
But will that have an impact on prices?
Well, I think that the near-term impact will probably be quite limited. I think, again, FSI increases over a period of time should both help developer profitability on a piece of land, but also reduce per square foot prices of that land, and therefore that should be passed on to consumers.
One more on the Mumbai prices. I mean, we've seen this rocketing. You think 2014-15 will be the same?
I don't expect prices certainly to increase very rapidly from current levels. I think clearly price levels are quite high in Mumbai today. That said, I also think the cost pressures on development in almost all parts of the country, and certainly Mumbai, through increases in the ready reckoner rate and other measures, are also evident. So I don't see a big room for prices to come down either, but I would broadly expect prices to remain roughly stable. Of course, there are upside risks to that if sentiment greatly improves through the election and the economy picks up, and there are of course also downside risks if things continue to be as weak as they have been.
Last word, since we're in the election year, what is your recommendation, or for that matter, expectation from the finance minister for our real estate industry?
Well, I think there are of course lots of real estate specific solutions that would be good, whether it's FSI increases, incentives for affordable housing. All of these are much talked about and well-known aspects that could drive the growth of the sector. But what I always believe is that frankly the sector doesn't need too much special care in that sense. What it really needs is just a good functioning economy and ability to get regulatory approvals within reasonable timelines. And if these two things are in place, if the economy in general is doing well, and if developers can limit the regulatory approval time to reasonable levels, I think there's nothing holding back the sector, because the fundamental demand for real estate in India is very much there.
Thank you so much for speaking to CNBC today.